Valens Research, Uniform Financial Analytics.
Intel, one of the largest semiconductor companies in the world. And for Intel, what's really interesting is when we look at it on an as-reported basis versus uniform accounting and as-reported return on assets isn't that different, right? And even on an asset growth basis, it's a little different, meaning you misunderstand the trends, but it's not dramatically different. What's really interesting about Intel is when you look at it from a valuation perspective. The big thesis on Intel right now is, well, Intel is going to transform itself and go head to head with Taiwan Semiconductor and others who are fabs by basically being the US fab, right? And for everybody. So it's not just going to be Intel and making Intel inside and trying to compete with people on its own IP. It's also going to have a massive footprint making everybody else's chips also and leveraging its massive infrastructure to do that. And that's really interesting is the argument out there in the market right now, because the fact that the company is so cheap, right? Trading at a 13 times multiple, that if they execute on this and they start getting value like Taiwan Semiconductor, which is valued as a much higher return business and a stable business, well, that's a lot of upside for the company. But what we can see using uniform accounting is the company's not that cheap right now, right? In terms of a PE basis, right? On a PE basis, it's only trading at a little bit of a discount to what market average PEs are, and arguably what competitors like Taiwan Semiconductor are trading at. And so it means that this transformation people are talking about doesn't potentially mean as much upside for Intel as you might think if you initially look at it. Now, that being said, if we do look at it on an embedded expectation perspective, what we can see is right now, right, the market is pricing in ROAs to continue to fade to cost of capital for the business, and also asset growth is continued to forecast to be. This number makes sense, but right, if it actually goes more towards Taiwan Semiconductor, let's actually just take a look at what Taiwan Semiconductor looks like. And what we can see is, if I look up Taiwan Semiconductor, let me just see if I can pull this up quickly. And what we can see for Taiwan Semiconductor is that it's actually a lot higher return business. Hold on, let me just get the actual ticker. Bear with me here for a moment. And there you go, 2330. And so if I look at that for Taiwan Semiconductor, what we can see is, hey, if Intel does successfully make this transition, Taiwan is basically a 10 to 12% ROA company every single year. So maybe that actually could be powerful for Intel that it's a little cheap, but it's not as cheap as it initially looks when you're looking at it from an as-reported basis.
Valens Research, the world's leading source for uniform financial analytics.